Welcome to OnlyTax, where we give you the naked truth about how the tax system works. We're back again with another episode of OnlyTax. Today, our accountant Jason will be reacting to a TikTok video that's been circulating online from DukeTax, also known as at Dukes Loves Taxes. The video gives advice about using an S-Corp to reduce self-employment taxes. And as you'd expect, it sparked a lot of strong reactions online. I'll ask the questions, and Jason will break down what's accurate, what's oversimplified, and where people need to be careful. So let's take a look.
All right, so for transparency, I've never seen this video yet, so let's have some fun ring. Okay?
Let's go.
Okay, when you start your business, hip hip hooray, and you file your taxes and you do not have an S corp, this means you're being taxed as a sole proprietorship. You're going to be subject to two types of taxes.
So first thing first is I actually met this guy before in person in Charleston, South Carolina last year. Super nice guy. All right, let's continue.
One is called a federal tax, and the second one is called self-employment tax. Now, your federal tax is generally just like your tax bracket. So let's say that's 20%.
Yeah, so your federal tax, it could be 24, even higher. Okay, so yes.
And your net income is $100,000. So in federal tax, you're going to pay $20,000. And self-employment tax, you're going to pay $15,300.
That is true. Self-employment tax can be very expensive, you guys. Okay, so that's why careful tax planning can go a long way. I have saved clients tens of thousands of dollars just in year one by helping them select the correct legal entity for them. Sometimes it's an S corp, sometimes it's a C corp, sometimes it's an LLC. It just really depends. You have to do an entity analysis first to run the numbers, see which legal entity will save you the most taxes. Let's continue.
So as a sole proprietorship with no S corp, your total tax is going to be $35,300. Now, when you're paying all of that money, let's talk about where it really goes, all right now? So the federal tax is going to help pay for things like the military, like raw, our military. That is what federal taxes does. Now, self-employment tax is going to help all our grandmas and grandpas out there, like with their canes, because this is going to help pay for retirement benefits, like their health insurance. That is what self-employment taxes does. So when you go S corp, the number one thing that happens is you stop funding the self-employment tax or the grandma tax. You are no longer paying into that. So when you go S corp, you can essentially think about, hey, my self-employment tax is gone. So in this situation, you would only be paying $20,000.
Not necessarily true. You would still have to pay payroll taxes on whatever wages and compensation that you have from the S corp. Because when you have an S corp, you need to pay yourself a reasonable compensation, and that reasonable compensation is not going to be a number that you choose. It's a certain formula and calculation that goes into determining how much reasonable compensation you need to pay yourself. So, for example, if let's say your compensation is $50,000, so then you would only have to pay payroll taxes on that $50,000 instead of the entire $100,000.
Instead of $35,000, because that is what an S corp does. It eliminates you funding into the self-employment tax program. But when you do that, someone kind of gets kind of angry, right? So here's the IRS. They're like, oh my gosh, that is not fair. You go S corp and you completely get rid of your self-employment tax. How are we gonna take care of grandma? So they're sitting there thinking, you guys come up with a deal. And this deal is now law to do something called run a reasonable compensation. So you come back to the IRS, it's like, all right, cool.
Yeah, that's what I was talking about earlier.
How about I pay a little bit, but I don't want to pay the whole thing? So what happens and what you're required to do is run payroll or a W-2, because when you do this, every time you run payroll, you're paying that 15.3% every single time that you run payroll. Generally, the strategy is here is let's make our payroll as low as possible.
Yeah, and that 15.3% for payroll, 7.6% comes from the employer side, and then 7.6% comes from the employee side. FYI, you guys.
The legal term is let's make our payroll or a compensation reasonable. So let's say we are doing $100,000 in net income. We may choose to run a reasonable salary of $30,000.
So you don't choose anything. You need to complete an analysis called a reasonable compensation report. It's going to ask you questions like, what do you do at your job? How many hours did you spend at your job? How many hours did you spend on marketing? How much hours did you spend on office work? How many hours did you spend on cleaning? How many hours did you spend on the technical side? And then you have to grade yourself on how good are you at those different things. And the better you are at certain things, the more your reasonable compensation is going to go up.
So in this example, you're still paying that 15.3%. Like you're still helping grandma out. But instead of paying 15.3% on the $100,000, you're only paying 15.3% on the amount that you choose to run as payroll, which is $30,000. Now, the last thing to consider is that S-Corp is not for everybody. And S-Corp is like going from a Toyota to a Lamborghini. It is a much nicer tax vehicle, but generally it comes with more maintenance, more monthly costs. And on average, it could be maybe $6,000 a year to maintain your S-Corp. Whereas if you're not an S-Corp, I don't know, it could cost you $700 a year to maintain that. So you want to make sure your savings when you're going S-Corp is more than the cost itself.
All right, so there you go. That was a great video. I loved his enthusiasm there. So amazing video.
So there you have it, guys. Jason has breakdown DukeTax S-Corp video. The key takeaway, S-Corps can be a powerful tax strategy, but they're not a shortcut. Real tax planning requires context, compliance, and professional guidance. Remember that, guys. So, if you want your tax questions answered in a future episode of OnlyTax, submit them in our private Facebook group, REI Tax Hack. Your question could be featured next. And if there's like tax video, TikTok, clips, articles, or any tip that you want us to react to, send it our way and we'll get into that. And yeah, thanks for tuning in. This is Only Tax, where we give you the naked truth about how the tax system really works.